Good afternoon, everyone. Thank you for joining on this webinar. We are having a very important subject today. When you would have seen the topic, maybe you would not realize what we are going to talk about. But understanding the custom audit provision becomes very important because customs has vast powers, as you know, relating to import and export of products in this country. So on this webinar, I welcome you all. The webinar's topic is Understanding of Custom Audit Provisions. And this we are conducting in collaboration with Exim Institute, one of the who have been collaborating with us and on various programs, and also our efforts to keep the trade abreast about new developments in various aspects of international trade policy. Now, friends, customs compliance and audit readiness are two very important components of successful international trade. And not only customs compliance, but a readiness to accept the customs compliances. That means whenever they visit you or they want to have a look at your records or your books, you should be prepared to sort of deal with that situation. So in this context, Section 99A of the Customs Act 1962, it grants power to the Officer of Customs to carry out an audit of the assessment of imported or exported goods. So this is an important section under which the custom draws its authority from the Customs Act. Now, in order to create an awareness about the legal aspects, the rights, the obligations, what are your rights, what are the powers that the fellows have, how they should go about it, we have scheduled today's session. The session is specifically designed to provide what we have been able to identify as about a few practical step-by-step points. Number one, the Customs Audit Regulation 2018. You must understand what that regulation is briefly. If you've not heard of it, first time you'll hear about it here. Key insights into the Customs Audit Manual. Just as every audit has a manual, Customs also has an audit manual. So what are the aspects, key areas there, which the Customs keeps in mind, and when they come to you, you must also be prepared. Please mute yourself, please mute yourself. How to prepare effectively for custom audit. Tomorrow, by any chance, if the customs visits your company or your firm or your manufacturing unit, how you prepare for a custom audit. Essential documents that you may be required to keep during the audit process, because these are important things. We at times leave it to the dealing clerk, or when the audit starts, we run around collecting documents, so many years, document, we're not able to get it. It takes a lot of time. So it's always good to be advised about the documents required. Best practices on how to prepare and maintain these required documents systematically at your office, and what practices you should follow to maintain these documents in your office. And above all, the importance of accepting compliance as an important value or a norm in international trade. Compliance is not something thrust upon you. Compliance is something which you have to internalize. Whatever action I do, I have to be compliant with the rules, regulations, concerning those issues, whether they're international rules, national rules, custom rules, excise rules, GST rules, and whatever else you have, all the rules that you have. So all these are important aspects. So simply talking of custom audit doesn't mean that some dry discussion is going to take place, but each of these are very relevant and basically are practical, sort of like a practical help book, sort of helping you out as a company to be clear and be prepared and be aware. So that is more important. So you should be aware. So here we are, and we have as Mr. Sudhakar Kasture, our director of the Exim Institute. He's a well-known personality in international trade. If you've been attending some of our programs, the ACPET and a couple of other earlier webinars, he has been very enthusiastically supporting our efforts. And he's always a very keen and a teacher, and also a keen learner and a key observer. So whenever he interacts in a new webinar, there's something that he gets to know from you, and you are also able to, get the advantage of his knowledge and expertise. Mr. Kasture has 40 years of all-round experience as a leading consultant to SMEs and numerous trade bodies. He heads the Exim Institute, a premier institution dedicated to impart specialized training in international trade. In addition to his consultancy work, he's deeply passionate, as I mentioned, about mentoring young management talent. That is why we are able to organize so many events And we're very happy that people are responding to this. Please tell your people, tell your colleagues, tell your whoever else you know to try and join, because they will go away with something positive. For 1 hour we sit here and you'll get some very positive information which you can use for your own company's purposes. He has also been a visiting faculty at the Indo-German Training Center. He has served as a trusted advisor for a number of companies: Hindustan Unilever, Siemens, Godrej, Blue Star, BKT, SR Oil, BPCL, Marico, Vedanta Group, ThyssenKrupp, Welspun Group, and of course, Raytheon, RPG, and many others. So I encourage all of you today to please listen carefully to the arguments and to the way Mr. Kasture will lead us through the presentation, and take full advantage of this opportunity. If you have questions, queries, or you have in the past faced some audit objections or an audit query from the customs, you will be able to understand. And you will be able to prepare yourself for that. So without taking much of your time, I would like to invite Mr. Kasture to take over the same. Kasture Saab, as always, the floor is yours, sir. And we will all benefit from your knowledge and your erudition and your learning. Thank you, sir.
Good afternoon. Just allow me a minute. Good afternoon, friends. Am I audible enough?
Yes, sir.
Yeah.
Yes, sir, you're audible.
Yeah. So we'll be talking about detailed analysis of customs audit. The agenda is Customs Audit Regulations 2018, information about Customs Audit Manual, how to prepare for audit, how to prepare and maintain required documents, and importance of compliance. So to begin with, Regulations 2018. CBIC issued circular Customs Post Clearance Audit. The link is there. You can see it. It is in 2019. CBIC feels the audit effort is lacking. You know why? Because if you are a AEO, anything of this sort, you are getting clearances based on self-declaration. And this whole concept comes out of post-clearance audit. So, goods should not be delayed, clearances should be given, and subsequently audit will take place if something found wrong. Not necessarily wrong, something which amounts to misdeclaration, something which amounts to mistakes. Anything and everything can be seen. Considering shortfall in revenue, government would be keen to recover money through audit system. Every revenue department of any government looks into collection of revenue, and audit is one of the major areas, because if something missing, something wrong is found out, not only that duty and interest can be collected, but penalties can also be imposed. So it's a serious issue to understand. However, it is not something new, because it's a regular affair. What is it aimed at? Finding flaws, irregularities, tax evasion, etc. Most of the companies are not fully aware of the serious impact of audit objections, which result into following three areas. One, disruption of regular work. If you are called by the officer that come and visit, then though time is given to you, you may probably spend the full day, because he'll say, I have 10 more things to attend to, 10 more things to listen to. So you please wait, I will call you. First, disruption of work. Second, some mistakes when found while checking the old records may lead to inquiries for transactions in earlier years. Something wrong is found in 2025. If the custom officer believes that you might have done this practice in 23, 24 also. He might go back, he might ask you more details and possibilities of penalties if it is found that something is wrong, continuously wrong. Show cause notices are issued. If all these cases are there, then there is a possibility of penalty as well, which is a financial impact on the company. But the concept comes from global based practices. Try and understand this. If consignment is stuck up at the customs level itself, it results into immediate financial costs like detention, damages, etc. So, what is the global best practice? Allow the clearance first and do PCA. Post clearance, don't hold the clearance itself. Naturally, when consignment is released and subsequently inquiries are to be held, that will go on based on the documentation, circumstances, declarations that you have made, submission of documents that you have done, online documents that you have presented. So, the original idea is creating an environment of increased compliance while allowing the department the flexibility to enhance the facilitation for importers and exporters. For example, in EU, they'll not hold your consignments. They'll let you go. Subsequently, they will check things. Same thing. PCA allows customs to reduce border controls by shifting compliance checks from the clearance stage to the post-clearance stage. And this is more evident if you are AO Tier 1, Tier 2, Tier 3. As per the scope and coverage of audit under PCA regime, this is most important. Not only transaction level details, but more importantly, the traders' commercial systems are also to be evaluated for compliance. Most of the time we believe that our commercial systems, why will they be evaluated by anyone? There are two serious issues connected with this and legitimate references to them. The first is under invoicing of imported goods. Second is over invoicing of exported goods. And third issue that is directly connected with this is called money laundering aspects. The fourth issue that gets connected with this, if something is hidden which influence the valuation of the commodity, which is not declared by the exporter, that has also to be explored. And these all have basic legal background in the existing framework. The risk management system will select the bill of entry for audit after clearance of the goods, and those selected bills of entries will be directed to the audit officers for scrutiny by the EDI system. Understand this. There are three kinds of cargoes: low risk, medium risk, high risk. 90% plus goods coming into India comes under the low risk category. And in low risk category, examination percentage is only 2%. In other words, when 100 bill of entries are filed, only 2 may be selected for the purpose of practical examination. In other words, 98% of the cargo under low risk gets cleared without any kind of audit objection per se, or without any kind of practical scrutiny. It may also be noted that audit officers are specifically being instructed to scrutinize declarations with reference to data quality, advise the importers, custom brokers, or CHS suitably where the quality of their declaration is found deficient. This is critically important. Quality of their declaration is found deficient. I will look at subsequently in the rules which ask you to specifically state this valuation rules under Customs Act so that you clearly understand what is the meaning of declarations found deficient. Some information about Customs Audit Manual. The present Custom Audit Manual explains 3 types of audits. One is called transaction-based audit. Second is called theme-based audit. And third is called premises-based audit. But before understanding these 3 things, let's understand the statutory framework. Section 99A. I am reproducing the section below this and understand the meaning very clearly because most of us may not be aware of what is the legal meaning of this term, of this section. This section defines the term auditee. It says auditee means a person who is subject to an audit under this section and includes an importer and exporter, very clear, or custodian approved under section 45, again very clear, or licensee of a warehouse, absolutely no problem. These 3 were always there. What is most important is the next sentence, and any other person connected directly or indirectly in clearing, forwarding, stocking, carrying, selling or purchasing of imported goods or export goods or dutiable goods. In other words, all the partners in the supply chain also get covered under auditee and custom can approach them. So if it is found something that some truck is held on the road, there are some interesting examples of this material imported under advance authorization going by way of transfer to the factory. But factory is somewhere in north and the truck is going towards south and that was caught on the way. So the question is, material is duty free. It is supposed to go to the factory. Why are you taking it to some other place which is not anyway connected with the importer? Is it a matter of tax evasion? In such cases, the person directly or indirectly in clearing, forwarding, stocking, carrying, the carrying comes into picture and he can be questioned, he can be asked. Department has the powers because 99A gives them these kind of powers. As per the scope and coverage of audit under the PCA regime, not only transaction level details, but more importantly, the trader's commercial systems are also to be evaluated for compliances. Now, what is the trader's commercial system? The commercial documents that you make, only that much? Or shall I look into your purchase order? Shall I look into what discussions that have taken place, what emails you have sent? Have you said that, okay, there was some problem last time, I proposed to give you, adjust this money in this particular manner? If traders' commercial systems are examined, there may be many such flaws which will come to the light. And customs can raise questions about it. Commercial discount offered as per the customs law. Perfectly all right, no problem. But commercial discounts, abnormal commercial discounts offered, is it purely for the purpose of reducing the duty burden? What exactly it is? How it is done? That is why this has to be kept in mind. Types of post-clearance audit. Transaction-based audit. This is continued side by side with on-site post-clearance audit. The latter being done at the premises of the importers. Although TBA is not a thorough as a field audit on site, it uses fewer resources acts as a reminder to business, trade, that customs are monitoring their activities, where a single transaction is taken and questions are asked. Premises-based audit. Under this audit process, the legal compliance and correct assessment of custom duties will be verified by the customs at the premises of the importers, exporters, or other related entities felt necessary in the completion of this process. You say, I have imported the goods without payment of duties stored in a particular warehouse. It is not available in my premises, then those warehouses can also be, if it felt necessary, can be taken into account. And theme-based audit, this goes with reference to review of data relating to the entire business activity for a particular commodity, industry, or issue. If I find something wrong in procurement of cotton, then whosoever is importing cotton, if something has to be done with reference to only one single commodity or one single industry, for example, cotton yarn or cotton fabric. So, whether it is a commodity, a specific industry, then theme-based audit can be taken into account. How this will be done? It provides a systematic approach to data collection and an analysis of data to determine the likelihood of non-compliance. This type of audit may in some situations entail audit at the premises of the auditee. The results of the audit are useful for peer review of importers, exporters across a specific industry. So if 5 people have done something wrong, but government believes that this is a practice being followed, and maybe there may be another 25 people utilizing this, then it can go for peer review. So you may not have done something, but somebody else has done something dealing with the same commodity. It can come back to you. The desk review would be based on the master file and should inter alia involve an examination of the following aspects. Let's understand what are those aspects. Normally, we don't look at it very carefully, and it includes both important commodities, imported and exported, whatever you are doing. All those HS codes which you are importing and all those HS codes which you are exporting. First, exemption notification availed and conditions thereof. What does this mean? Exemption notification under various schemes of FTP, Advance Authorization, EPCG Authorization, EOU scheme, exemptions under FTAs. Large number of imports are going to come under FTAs. Exemptions for particular end use, jumbo notification, project imports, specific imports, etc., etc. And all these notifications at times are sometimes unconditional, sometimes conditional. Particularly if you look at jumbo notification 50, you will find this, that there are certain conditions to be complied with if you want to take exemption of those duties, and therefore that also has to be seen. Nature of expenses on account of remittance of foreign exchange and its effect on the valuation of imported goods. Critically important. This is a very huge area, particularly where remittances is made using credit debit notes, which are includable as per Custom Valuation Rules 2007. Two notifications you have to refer. Notification 94 for imported goods and notification 95 for exported goods. As I said, the focus of the government is to check under invoicing when it comes to imports, over invoicing when it comes to exports. And what is includable has been clearly explained in custom valuation rules. What are the cases? What are the examples that have also been given? My experience of the industry is those who are filing 500 shipping bills, people have not studied Valuation Rules 2007 in depth. Foreign currency transaction given as part of notes to account in the balance sheet and profit and loss accounts. Normally, the Exim department is not aware of this, and accounts department may not be aware of what is exactly happening at the Exim level. So, correlations with transactions of imports and exports. If some mentions are given in the balance sheet, that becomes a problem, and that can be asked by the department. Related party transactions as reported in notes to accounts, given in the balance sheet and profit and loss accounts. Detailed scrutiny of related party transactions and conditions thereof, because government belief is this, that related party transactions definitely influence the pricing because both parties are related. So these details are also asked for. What is the mechanism? Directives of Customs Audit Department will follow. Reference pricing. Reference pricing, they have their own websites. They have their own open sources. There is one more methodology of looking at reference pricing. If 100 bill of entries are filed for the same HS code, and you see the pricing, let's say $100, $100, 97, 98, 102, 103. Suddenly you find one bill of entry, $75. Understand, custom has artificial intelligence. Custom has details available with them. They also have technology to filter. So this is another area where they can work out average pricing, reference pricing for that particular commodity. Show cause notices issued to the company so that this shows that if there are any transaction level mistakes that have happened earlier, whether they are repetitive or not. Returns filed by exporter importer. In good old days, we used to believe that excise returns are with excise department, VAT returns are with VAT department, octroi returns are with octroi departments, any other custom returns are with customs department, and they don't interact. With the introduction of GST, and customs and GST both working under Department of Revenue, please understand all your returns in the electronic format are available with the department. How do you file your GST returns? Electronic format. How do you file your shipping bill? Electronic format. How do you find your bill of entry? Electronic format. How do you file your monthly returns? Everything is available electronically. And if you do coordination, you would be able to find out the mismatch. This is one serious issue. I have imported 500 metric tons against advance authorization. Suddenly my local sales increase and my exports are not getting affected. Government will say you must be utilizing the duty-free material for domestic consumption. Now, do I need to prove it that I'm not utilized? Custom will not give you that option. Custom will say, let me check your GST returns. Now you show me your purchase value. Now you show me what quantities you have purchased. And if this doesn't match with the records that they have, you can be questioned. So returns filed by the importer exporter plays critical important role. What schemes you are using? Because most of the schemes which offer you duty exemption at the beginning, they are never unconditional, they are conditional. They require obligations to be completed. Website information, website of the company, both exporting company, importing company, generic websites, and information available on internet and open resources. That is also possible. Custom can have details from all these. Study of Form 3CB transfer pricing and from Form 3CD income tax audit report, particularly with reference to transfer pricing, this plays an important role. Related party transactions use this. Audit objections raised at different custom stations if you are a company operating at multiple custom stations. Assessment practice at different custom station for the same product. Export promotion schemes availed. Show cause notices issued by different custom station. And never forget data from National Import Database, London Metal Exchange, Independent Commodity Intelligence Services, etc. available to the Customs Department. Reasons for execution of bond, why you have executed a bond. Relevant returns filed with other government agencies, GST, income tax, etc. Information available at the website of an auditee, that is also seen. Court cases and other information available on internet, open sources. These are all resources available with the government with which they can check, they can prepare their own details, and they can decide to take premises-based audit or not. Abnormal variations or results noticed during trend analysis will indicate risk areas. From the importer's master file, trial balance and annual financial statements, important financial ratios can be worked out. That is what they will do. These ratios should be compared with those of earlier years, and wherever significant variation is noticed, these areas may be selected for audit verification. It may, however, be kept in mind that an adverse ratio is only an indicator for verification of particular area, and there may be valid reasons for the same. For example, post-Iran war, change in the freight, change in the insurance values. Definitely, government also knows. So it is not going to impact you as long as you have proper documents with you. Check unit values of imported items on average basis against NIDB data. Please remember, custom uses artificial intelligence and other tools for data analysis. So they will use technology the way you use AI. In the same fashion, they will use technology to work out whether the importer has imported goods leviable to anti-dumping duty, safeguard duty, or CVD without payment of the same from the neighboring countries. Very important aspect. In other words, are the goods traded? You have imposed anti-dumping duty on Chinese goods, and goods are coming from Bangladesh. Are these goods originating in Bangladesh and coming to your country, or is it traded goods coming from China by change of label into your country? That will also be checked. If imports are made under duty-free import authorization, advance authorization, EPCG authorization, project imports, whether conditions thereof are fulfilled, whether substantial amounts have been paid towards royalty, license fees, etc., and its impact on value. Valuation rules 10, cost and services. Whether the violations or pending investigations under different laws have a bearing on violations under Customs Act 1962. Is it anyway related to valuation of goods, and therefore valuation is getting lowered and therefore loss of revenue? That is another question mark. So what are documents related to audit? It's a long list. Bill of entry, shipping bills pertaining to the period under audit. Very clear. Purchase, sale invoices, GST invoices of receipt and supply. Packing list, airway bill, bill of lading, insurance document. Two types of insurance documents: insurance policy or certificate of insurance. Test reports, catalogs, If it is machinery, engineering drawings, whether you have paid separate money for engineering drawings, technical specifications, other parameters which may have impact on duty. Common commercial documents, certificate of origin, pro forma invoice, export license, import license, price list, bond records, duty paying documents. Each applicant who wants to claim ITC under GST, an invoice issued by the supplier for the supply of goods and services, or both as per GST law. Debit note issued by the supplier to the recipient in case of taxable value or tax payable mentioned in the invoice is less than the taxable value or tax payable. Bill of entry. An invoice or credit note to be issued by the input service distributor as per invoice rules of GST. A bill of supply issued by the supplier of goods and services, or both as per invoice rules of GST. Please understand, when you import something and you pay GST, IGST, you get the credit, input tax credit. So GST and customs get connected to each other, particularly when you are importing. Then, based on the jurisdiction, based on where the actual goods are moving, which factory, from where the export is taking place, if it is duty-free goods. These are all issues Revenue Department sees carefully and sincerely. Contract or purchase order. A contract or a purchase order is a formal version of the planned purchase order involving a legal agreement between exporters and importers. How you are going to look at it? Creditors ledger for foreign supplies. Creditors ledger for transporters and insurer. Sales invoice of imported goods sold as such, where you are not consuming the goods, you have directly sold them. If you are a particular trader, then what are the invoices that you are making? Import-export licenses, authorizations, import-export transit or intra-community transfer authorizations are legal documents delivered under certain conditions by the Control Office of Imports and Exports. NOCs, import permit as required under the foreign trade policy. Wherever such kind of restriction comes, you have to follow. Certificates of country of origin if you are taking FTA benefits. GST returns is a document containing details of all income, sales and expense purchase which a taxpayer is required to file. Details of bank relations for all foreign remittances towards supplies. Refunds and drawbacks claimed, how you have claimed it. If you have claimed it on brand rate basis, proof of payment of duty paid, copies of bill of entries, import invoices. Re-export of goods, approval from the Reserve Bank of India. And then common documents again, copy of bill of lading, bank certified invoices, export invoices, freight and insurance certificate, because you have different Incoterms that you use. And when this happens, you have to submit all this, whatever is demanded. It's a long list. You have to understand because all these documents you are aware of, your company people handles this. What are the principal checks custom will carry out? This is very critical. Understand this because this doesn't give you any option. In case of manual records, discussions with person handling the records to ascertain allocation of responsibilities at different level. See whether there is a system for serial numbering of records and whether there is scope for alteration, replacement of records. Fine. Paper document, we do understand these things. Serial number of records, invoice serial numbers are missing, anything of this sort. More complicated comes here. In case of computerized records, most of the companies follow today computerized records. Verifying the accounting software used, stages of data entry, data security, and scope of human intervention or manipulation, and audit trail of the transactions. Independence of audit is internal audit officer, reporting mechanism for internal audit officers, and action taken by the company on the basis of findings of the internal audit officer. If you have internal audit system, he has made some recommendation which you have not followed, you can be questioned. And whatever your computerized records are, they can't be hidden from anyone, particularly from a government agency. They will ask you for this. Sometimes they may ask you hard disk also. Give us on pen drive, whatever you have done, we will check. Whether any system audit is done to check the reliability of accounting systems, have you done it? Whether prompt action is taken on the findings of statutory audit officers? Whether any system audit is done to check the reliability of the accounting systems? Whether cost audit is conducted, if mandated, and whether prompt action is taken on such reports. All these will establish your credentials. If you have followed all this, suppose you are a large company doing business, you follow all of this, then your credentials are established. Then questioning will be comparatively less. If you cannot answer these queries, questioning will be higher and doubts will simultaneously be higher. The number, extent, and frequency of violations noticed by various regulatory agencies and the subsequent corrective action taken by the auditee. This is very important. Subsequent corrective action. If you are asked to do some correction in your system, have you followed it seriously or you just forgot about it? This also plays an important role. Misuse, non-compliance, less payment of duty. This arises out of misdeclaration of HS code, utilization of wrong exemption notification, misuse of FTAs, difference in valuation, misuse, non-compliance with conditions of authorization. This is critically important. Persons involved in import and export activity in violation of prohibitions or restrictions in vogue or with the intent to evade duties or fraudulently claim export incentives are liable for strict penal action under Customs Act 1962. Now let me take you to the filing of documents. Rule 11, declaration by the importer. I am talking about Valuation Rules of Import, Notification 94 by 2007. When you import the goods, importer is required by law to give true declaration with regard to value, specification, characteristic, brand. Now understand what is the difference between true declaration and simple truth. I imported a car. Declaration is correct, but not accurate. I import Lamborghini XYZ model having this specification, these characteristics. Car can be valued from maybe 6 lakhs to 3 crores. But Lamborghini is never valued in 6 lakh, 10 lakhs, 20 lakhs, 30 lakhs. Very easy for them to find out if these details are not available. And it is the legal responsibility of the importer to give true declaration with regard to value, specification, characteristic, brand, etc. Where this is covered? This is covered under Rule 11. Your value declared to the customs can be rejected by customs, and the mechanism is given. Explanation to Rule 12. What it says? This rule does not as such provide a method of determination of value. It merely provides a mechanism and procedure for rejection of declared value in certain cases. And then it says, it also clarifies that where the proper officer is satisfied after consultation with the importer, the declared value shall be accepted. Now, where are the doubts? There are 6 areas mentioned. First, significantly higher value at which identical or similar goods imported at or about the same time in comparable quantities in a comparable commercial transactions were assessed. You have imported 10 metric tons, somebody else has imported 100 metric tons during the same period, let's say 1 month, and he got a discount. No problem, because quantity discount permitted. In comparable quantities in a comparable commercial transaction. How do you compare a commercial transaction? The shipment can be on DDP, value is different. Shipment can be on CIF, value is different. Shipment can be on FOB, value is different. You purchase something X works, value is different. You import that. Rule 10 provides you these details. What all has to be added to arrive at CIF. You must read the valuation rules carefully. You get the idea about this. So this is the first way how you look at. If somebody has given you credit for 90 days and therefore he charge you $2 extra, no problem. As long as it is declared on the invoice that this is for credit, this is not the cost of the value of the commodity that is imported. This is because of a financial transaction. I'm charging this amount of money. If it is not declared on the invoice, then comparison will take place. So these points have to be understood. Comparable quantities in a comparable commercial transaction. Second, the sale involves an abnormal discount or abnormal reduction. In other words, normal reduction or normal discount is permitted. But from which value? From the ordinary competitive price. Third, the sale involves special discounts limited to exclusive agents. Government believes price is definitely influenced. Fourth, the misdeclaration of goods in parameters such as description, quality, quantity, country of origin, year of manufacture or production. Very clear. The non-declaration of parameters such as brand, grade, specifications that have reference to value. And the last one, the fraudulent or manipulated documents. Everything is very clear, well explained in Rule 12. But normally, we do not look at Rule 11. We do not look at Rule 12. We also do not look at Rule 10, cost and services. My request to you, special request to all of you, study Rule 10, 11 and 12 carefully. One more aspect I must tell you, that is, we leave these jobs to third parties. Not that third parties are not knowledgeable, but the way you know your product, you must have continuous dialogue with the agencies that you handle, and you should ensure that things are properly declared. Offending goods can be seized. 110 of Customs Act 1962. This is just for your information. The proper officer may serve on the owner of the goods an order that he shall not remove, part with, or otherwise deal with the goods, except with the previous permission of such officer. The person from whom the goods are seized is issued show cause notice, usually within 6 months. Otherwise, the goods shall be returned to the person from whose possession they were seized. Just to give you an information about this. Confiscation of seized goods. Again, legal information. Also, the goods which are imported or attempted to be imported or brought into Indian custom waters, contrary to any prohibition imposed by or under Customs Act 1962 or any other law for the time being in force. So if prohibited goods, restricted goods are entered without the proper restricted goods, without the proper authorization from the government, that can be questioned. And goods can be confiscated. Confiscation of conveyance, packages, etc. Yes, that is also possible. Because something unauthorized is found, it can be questioned, it can be checked, it can be confiscated. What are the penalties under Customs Act? 111A, composition of mandatory in certain cases, penalty equal to the duty or interest. 114A, if a person knowingly or intentionally makes, signs or use, causes to be made, signed or use any declaration, statement or document which is false or incorrect in any material particular, you know what is the penalty? 5 times the value of goods. Because this is basically knowingly or intentionally. Section 116, any goods loaded in a conveyance, penalty not exceeding twice the amount of duty. 125 states the redemption fine shall not exceed the market price of the goods confiscated. This is the maximum penalty which can be levied. Whatever penalty that is levied, you have to refer to the section. And based on the section, your replies have to go. You cannot give just generic reply. Humse mistake ho gayi. No. Then the questions will be asked, is it knowingly done? Is it intentionally done? Etc. etc. So these are just again for your information. Now let us come to do's and don'ts for smooth operations. Practical guide per se. Preliminary preparedness. You must have knowledge of valuation process, critically important. You must have knowledge of exemption notifications, critically important. Knowledge of prohibitions and restrictions. Knowledge of applicable conditions. Knowledge of correlation between various laws, FEMA, FTDR Act, product-specific rules described by different ministries. Have a common understanding with customs laws, so that has to be seen. Interaction between government departments, how government departments interact with each other, that also has to be seen. Nowadays, electronically, things move. And please remember, if anything negative is there, that gets immediately communicated. If your IEC number is appearing in denied entity list, custom can ask you further questions. It is not like good old days that letter will go by post, by registered post, he will receive, he will take action, etc. He might forget to take action. Now it is directly available online. Understand this. It is much more like a WhatsApp group. When you put something on WhatsApp group, everybody knows. In a similar fashion, the government departments know information from each other. What are the compliances? Under Customs Act 1962, you have CCR, compulsory compliance requirements. These are to be fulfilled before customs can allow clearance of the imported, exported goods. The Customs Electronic Risk Management System has a consolidated database of CCR arising out of various allied acts administered by various government departments. Importers, exporters, CHAs are advised to study the allied acts and keep ready the necessary documentation. What is necessary documentation? Certificate, permits, licenses, any other documents for the clearance of the goods through customs. Exemption notifications and conditions related to each exemption is a loss for the revenue at the beginning. What Custom Department is saying, you are clearing the goods without payment of duty and giving me a legal undertaking that you will comply with the conditions. But today, I'm not getting that revenue. It is something like this. You sold goods to somebody on credit basis. Are you going to follow? Of course, yes. Because goods have been delivered, money is not received. Same way, custom is going to look at all the exemption notifications, conditional exemption notifications more, because there is a condition related to why exemption has been granted, because you are supposed to perform something. If you have not performed something, I have to take back that exemption from you. Please understand this critically well. You have imported under concessional rate of duty, Jumbo Notification 50 by 2017. You have imported under Free Trade Agreements and Carota 2020, various PTAs, Preferential Tariff, Free Trade Agreements, LDCs. Everything has to be examined. BIS standards applicable to products, foreign manufacturer, application for various export benefits, subsidiary companies of foreign manufacturers. Then schemes, drawback, RODTP, ROSCTL. What are the common mistakes? First, ignorance about compliances. Normally, we are not aware. Second, wrong filing of documents. Third, mistake in documents. Please understand, this is very important. I make a mistake in document and I correct it. In good old days, I used to replace the document because it was paper document. In electronic data, you cannot replace. So you submit something, government has details of what you have submitted. Then you amend something, government has details of that amendment as well. Never forget this aspect. Delay in corrections. If you come to know about a mistake 3 months later, doesn't make sense. Not understanding implication of HSN, another big issue. People don't study HS classifications carefully well. Custom valuation rules, particularly Rule 10, cost and services, which has greater impact on Incoterms as well. Conditions applicable to notifications. Advance authorization is issued to you. You have another document attached with advance authorization called condition sheet. Tell me honestly, how many people read it? Implications of wrong declaration, and most important, failure to update. We never update ourselves. We always look at somebody else to give the information to us. And if we find it is worth considering, then we'll look at it. Otherwise, we always wait for somebody else to give me this. I always give family examples. Your child is going to school. You care for the child. You don't leave everything to others. Same way, your business, you must take care of these kind of things. What we need to do? Understanding compliances related to audit. I have explained you all the details. Specific compliances under end-use certification, end-use notifications, project imports, obligation under duty exemption, EPCG, OU scheme. When you use advance authorization, you get EODC. People think case is closed. Case is not closed. You got EODC. EODC related document have to be submitted to customs, get the legal undertaking cancelled. Then your case is closed. Closure has to happen at the customs end. Otherwise, custom may raise a query, I don't find any document after 10 years, then you keep searching about it. Doesn't make sense. EOU scheme, if you are under EOU quarterly returns filing, annual returns filing, everything has to be checked properly. Internal audit of systems, most of the companies, limited companies, private limited companies have internal audit system. Check about what they say. Understanding paperless and faceless transactions, critically important. Reducing reliance on external agencies. I'm not saying they are not knowledgeable, but both need to be updated. You must have discussions with them, maybe once in a month. What are the changes that are happening? How to look at? If you come across a change, you inform them that this is a change. Are we aware of this? Normally, people do this post budget for 2-3 days, limited to very few questions. The questions are normally limited to what is the change in income tax, what is the change in custom duties, what is the change in GST. Beyond that, we don't ask questions. No, there are legal changes as well, procedural changes as well. They have to be understood. And what is most important in this case? You must have a SOP. SOPs avoid common mistakes, create disciplines and responsibility, help newcomer to understand the conceptual and procedural aspect. Create SOPs. Most of the companies do not have SOPs. Specific checks related to contractual obligations, special packaging, dangerous goods, compliance with specific laws, Legal Metrology Act, Export-Import Control Regulations, non-tariff notifications related to FTAs, and compulsory compliance requirement wherever they are applicable to your product. You must also notice custom notifications related to exchange rates, because whatever your remittance may be, the bill of entry has to be filed based on declared customs exchange rate notified, normally every month, sometimes 15 days as well. If the currency is fluctuating fast, then 15 days also custom will issue a new notification. Updation and amendments. These are the links. If you directly want to check, these are the links. You can check from this. And I have given you complete list of wherever and whatever you want to check, you can. Foreign trade policy, tariff, non-tariff, anti-dumping, safeguard, countervailing duties, import of goods and services, RBI regulation, export of goods and services, RBI regulations, import-export data, BIS standards, Customs Act 1962, Customs Tariff Act 1975, goods and service tax. So all this is available. You can check. You can appoint a person to update on all these issues. Updation, keeping yourself updated on amendments, particularly with HS codes. Every 5 years, HS codes undergo change, modifications, deletions, additions happen. The next is due in 2028. So 2027 details would be available. Please check on them. Changes made in law, particularly post-budget. Overall operational understanding, creation of SOPs, not only creation of SOPs, but amending them regularly. Compliances, understanding compliances related to audit. We have discussed that. Audit requirements of AEO, Tier 1, Tier 2, Tier 3 and logistic operator. This also is critically important because a lot of details are provided while granting these certifications. Specific compliances under end-use notifications, correct filing of related documents, internal audit of systems, understanding, all these you have to look at. Most importantly, self-reliance. What are future precautions? Since entire documentation related to import and export would be completely online, proper SOPs are must. Whatever little left, which is still in the paper format, that will also undergo complete change. DGFT has already issued a trade notice in February 2026 for amendment in Negotiable Instrument Act, Stamp Duty Act, etc., primarily to correlate paper documents having same legal reference or same legal equivalence with an electronic document. So wherever, like we say, 3 originals of bill of lading, e-bill of lading will also have the same legal value. It's a question of amendment to the law that will be carried out. Knowledge of system plays an important role. People filing the data must be aware of requirements on responsibilities. And let me make you aware of 2 responsibilities which are passed on to the company. Section 46 and Section 50. Section 46, entry of goods on importation. That means you are filing bill of entry. What it says? The importer who presents a bill of entry shall ensure, it doesn't say shall submit, it says shall ensure the following: accuracy and completeness of information, authenticity and validity of any document supporting it, compliance with restrictions or prohibition. In other words, compliance with restriction or prohibition relates to FTP, licensing, authorizations, authenticity and validity of any document, documentation, accuracy and completeness of information, whatever is required under Rule 11 or Valuation Rules 2007 in totality, you must be able to comply with. This is the responsibility enforced, because the wording used is ensure. When you are an importer, when you are an exporter, the exporter who presents a shipping bill or bill of export shall ensure the following. Same thing. So, when it comes to export, please refer Rule 5 and Rule 7 of Custom Valuation Rules 2007 for export, Notification 95. Most important documents. Again, I made a list. You can refer this list. Areas of critical understanding. Every exemption granted in advance has future obligation. Every facilitation granted has compliances. Compliance issues are subject to audit for continuation, renewal, or upgradation. Compliances are stringent as they deal with safety. Entire documentation is electronic. Hence, one has to prepare and monitor proper entries, coordination, standardization, drafting of proper SOPs, revising them. Most of the companies rely on external agencies, never check the knowledge aspect. Please do check the knowledge aspect. Department is coming out with different FAQs. Hence, one cannot say that we have never been informed. Please look at the FAQs. In conclusion, whatever is inevitable must be faced. You need preparation if you are not sure what is being checked. Interconnectivity of data provides substantial information of which you may not be aware of. Government has the information. Knowledge is the only key. It avoids unnecessary harassment. The only mantra, remain prepared, knowledgeable. It's my habit to give a thought. So today's thought is strength, right thought is mastery, is power. Without getting excited, if you prepare yourself well, probably you have very good option, very good methodology of checking, and you will be able to satisfy all the queries. As long as you are knowledgeable, people cannot harass you. People harass you when you are not knowledgeable. So please study this well, and thank you so much to TEXPROCIL for giving this opportunity to talk to you. And I hope this will help you understand the subject in depth, also the steps to be taken by you. Thank you so much.
Thank you. Thank you so much, Kasture sir. Now I request audience to please unmute yourself and ask the question if you have any question. Or you can also put your question in chat box.
Sir, I have one question. Shreya here.
Hi Shreya, please ask the question.
Yes. So, sir mentioned post audit, post clearance audit, right? So, when he says about post clearing audit, I do export of pharmaceutical raw materials. Is there any specific timeline of this audit that it can come, or is the audit for like all the entire export that we've been doing, or particularly one shipping bill or a 1BL? If you can just give more clarity on that.
Yeah. It is like this. If the audit is taken by the audit department theme based or
Okay.
transaction based,
Okay.
if some of the shipping bills filed by you, some of the bill of entries filed by one single exporter or importer continuously becomes questionable, then it will be transactional based audit.
Okay.
It can happen. There is no guarantee that it will not happen. It all depends on what are the practices that are being followed.
Okay.
If
So
number of show cause notices issued to the same company over a period of time, then it can happen generically also. Premises based audit also can happen. It depends on what is noticed by the customs.
there is no timeline for this.
There is
Like
no timeline as such.
in GST, they have a timeline of 4 years. So within 4 years, you need to.
Normally within, it will not take even 4 years. It will
Okay.
be not within that, but it's not something compulsive that they will have to come next day or 15 days later or 20 days later.
Anytime.
Yeah.
Okay. So another follow-up question, sir. So just like an example of GST, if we get a GST audit, we call our CA in. So in case there is a customs audit that comes in, then which professional is most suitable to handle this audit? Because as a client, we will not have the most amount of experience, right?
No, but my question is little different. If you are a limited company, are you a limited company?
Yes, we are a limited company.
You have an internal auditor,
No, sir, we don't have an internal auditor.
then have internal auditor first, because there are many mistakes which are common mistakes. They can be sorted out.
Yeah, but so
If
our
not, you look at for a customs consultant.
customs consultant, is it?
Deal
Because
with Customs Act so that he can explain you better.
okay, if you have
Even
any,
if CAs have, unfortunate part is CAs are more concentrating on GST. They are not really concentrating on customs. But if you find chartered accountant who is expert in customs, yes, definitely no problem.
yes. So my chartered accountant has a little knowledge, not a lot. So I'm from Bangalore. As we are a private limited company, I started exports only about 9 months ago. So all these regulations are a little bit overwhelming at this point.
Yeah, I understand.
Yes.
No, don't take burden of it. It's not something that you are going to get hit. As long as your practices are right, as long as you are complying with whatever the necessary requirements, audit will not come to you.
Yes, agreed. So no, so I have to find a car. If you have any contact for anyone in Bangalore,
Yes,
if you can pass it on.
Send me a mail, I will reply back.
Done.
No problem.
Please just put your mail on the chat box,
Yeah,
sir.
that TEXPROCIL will do that.
Done. Thank you, sir.
Yeah, Mr. Yejur,
Yeah,
raise your hand. Please ask your question.
yes. Good afternoon to one and all. This is Salil Chawla, Director, DFU Publications. Actually, my question is that, as it is said, as a motherhood statement, one size does not fit all. My understanding is that, as everybody is aware, that already we have staged two major FTAs, one CETA with UK, which is already come into force. The another one close on the heels is with EU, which is expected. Few people say first half, and many they say second half of 2027 it will come into force. So given that all these now new realities emerging, emanating, are these whatever provisions you have told, are they different for these two set of countries, or are they same universally, so that we should be prepared tomorrow to meet the opportunity which is coming upon us?
Okay.
Thank you so much, sir.
Yeah. As far as imports coming from these countries are concerned, there is already a system existing in India called Carotar 2020. Clearance of imported goods, where you are taking advantage of FTAs. There is a separate documentation requirement to be filed. Customs will check that. It is primarily based on the truth declaration of origin, whether the goods are wholly obtained or partially produced in that particular country, whether it meets the requirement of tariff and non-tariff notification of that particular FTA. If it is compliant with it, clearance will take place. If it is not compliant with it, clearance will be held up. So please refer to Carotar 20.
Any
So much,
visual
sir,
team?
for demystifying.
Sir, we are going to have a session on Carotar 2020 in August.
Sure. We'll
Yeah, yeah.
discuss in detail, no problem.
Yeah.
But it is already there. And please don't expect everything in imports will be so simple. As far as exports are concerned, yes, to a great extent, you will get some relief in terms of certificate of origin, because when you deal with developed countries like UK or EU, they have proper electronic systems. The problem there is again your compliance with the technical regulations. So you'll have to study them well. Please study tariff notification and non-tariff notification already issued for India, UK. India, EU is yet to be signed. When it is signed, you will have tariff and non-tariff notification. And once you study that, you will get the idea.
Thank you so much for follow-up answer too. Many thanks, sir.
Thank you.
Anybody, any question? Can you just open the chat box? Is there any question?
Hello.
Yes.
Sir, I have a question. This
Yes.
is with regards to we are AO Tier 2. As mentioned by Sudhakar sir, that post-clearance audit is basically because the material is clear on self-assessment basis and then post-clearance audit took place. And he specifically stressed on AO. So, is government is trying to keep an eye on AO more because they are getting faster clearance?
Customs will look into wherever they find variations. Because the Department of Revenue orientation is towards revenue. AU is more a facilitation per se. So, what is the greatest advantage of AU Tier 2? You get international classification. You are classified as a compliant person with reference to customs regulation, supply chain regulations, etc. That improves your image international. Understand this. Export house status is a national recognition. AUO status is an international recognition. But that doesn't mean that there won't be audit. Audit will be there. Maybe audit will be at a duration. May not be maybe once in 3 years, maybe once in 5 years, but audit will be there.
And sir, if audit will be there, then what is the process of audit? Means will they visit the
Process
factory?
of audit will continue to be the same. It depends on what data audit department has collected against you.
And it will be intimated in advance. I hope so.
It will be intimated in advance. If not intimated, they will say, okay, we are coming and visiting you.
Okay. And sir, when they will do the audit, that has to be approved by some commissioner, chief commissioner, or
Yes,
how
yes,
it is being
yes. That
selected?
that will be done by the department. Unless until department informs, they will not just go. Because for tier 2, there has to be a relationship manager.
Hmm.
There is a provision in tier 2. So check with your relationship manager who is a customs officer who is supposed to help you.
I have question.
Understood.
Hello.
Yes.
I want to know what is the limit of this custom audit. It is applicable to all exporters.
It is applicable to all exporters. Wherever custom finds something going wrong,
They will
Okay.
come.
If something find going wrong, then it become applicable.
see, it's very simple. Suppose you have been issued 10 show cause notices in 1 year.
Okay.
Your case can be a fit case for audit.
Okay. Okay, sir. Thank you, sir.
Yeah.
Any questions, anybody? Chat box, can you just open? Is there anything? Nothing. Anybody, any questions? I think, sir, there are no questions. So I just wanted to make some few announcements about our upcoming webinars. Friends, we are going to have a India-UK CETA Rules of Origin webinar on 5th of August. Then we have Rupee Ruble Trade on 12th of August. Then we have Interest Subvention Scheme, which is under Export Promotion Mission. It's on 18th of August 2026. And the fourth webinar will be Carotar Rules 2020. So I request all of you to please register for these webinars. We are going to issue circular today also. And on WhatsApp also, sir, we have a dedicated WhatsApp channel. I request all of you to please follow that channel and get regular updates of trade. With this, I thank you, Kasture sir, and all of you for attending this session. Thank you so much. Thanks a lot, Kasture sir. Thank you.
Thank you.
What's the WhatsApp number?
Yeah, we'll share you the code, sir. Can you just share the code? You have a code? One sec. मैं आपको भेजता हूँ WhatsApp पर अपना इसका channel.
Number नहीं है तो
Rakesh, can you share the joining link?
TEXPROCIL Maharashtra export process.
Yeah, I think yes, share. Sir, can you check the chat box? He has already shared that.
Yeah, I
Yeah.
checked it, but how do I save this thing? This will go away as soon as it comes down.
Can we get your mobile number, sir? We'll send you a joining link.
98300 56522.
98300
56522.
6522.
And I need a number for Dr. Sudhakar also, Sudhakar Kasture.
Yes, sir. We'll share you, sir. Don't worry.
Thank you.
Yeah. Thank you, sir. Thank you.